Hello everyone, and you're watching Bitcoin Bubble news channel. Pretty much everyone agrees that the next president will have to deal with a debt problem in the US government. I'm worried about how that reaction will be no matter who wins. As an example, when Trump had a major economic crisis due to the lockdown policy and COVID-19, he and his administration reached out to Larry Fink of BlackRock. Fink put in place what some researchers have called the going direct reset, which was a way to put money from QE directly into the hands of private businesses instead of government agencies, similar to what had been done before. That may have led to a huge move of wealth, and BlackRock didn't really use that money to help Main Street at all. That, among other things, used to buy shares in their own ETFs. If you sign up now, you'll get all the new information for free. Please stay ahead of the trends instead of just following them. Sign up for Bitcoin Bubble right now and enjoy the new edge. Whitney Webb looks closely at how groups like BlackRock, which have a lot of power over fiscal policies, affect our government and economy to show how power works behind the scenes. She thinks that future problems will be caused by the elite or by questioning mainstream stories. Instead, she wants people and communities to be stronger. Then there's Kamala. Her whole economic team is mostly made up of former BlackRock leaders. That was also true during the Biden era. So basically, BlackRock, which also played a big part in coming up with the bailouts during the 2008 economic crisis when Obama was president, will probably be coming up with the solution for whatever the next economic crisis is, no matter who wins the election. These days, it looks more and more likely if we look at the policies of the people they turn to in times of trouble or the people who run their economic team. That's why I'm especially worried about BlackRock. It looks like the government always goes to them, whether a Democrat or a Republican is in power. In the past, they have really changed how wealth is transferred. While they're supposed to be making or helping to make policies that will help Main Street during these crises, they end up causing huge loans for Wall Street and of course the people that BlackRock is trying to make money off of in the end. Another thing that worries me about an upcoming economic crisis is that I think there will be a big push to give American customers large amounts of money that can be programmed and watched. A lot of people have been worried about central bank digital currencies or CBDCs for years now. But there are other things like stablecoins that are released by the private sector that are just as programmable, trackable, and large as CBDCs. So I think it's very likely that it will happen if there is a big debt crisis or some other kind of crisis that makes it hard for regular Americans to buy things. People in the US will be tried to switch to one of these two types of programmed or trackable money. So, if Kamala wins, we might be able to see his CBDC or something. Trump, on the other hand, seems to support stable metals. He did that not long ago in his speech at the Bitcoin meeting in the beginning of the year. In theory, stablecoins can be programmed, watched, and are the same size as CBDCs. As other people have pointed out, I believe those put our financial privacy and, in the end, our financial freedom at risk. So I think people should not only be interested in CBDCs, but also these other, I guess, digital currencies that could give the people who issue and produce them the same Orwellian powers. There are also well-known stablecoins like Circle that work closely with BlackRock. BlackRock has a small stake in these companies and has said in SEC papers that the stablecoins can be used to change the price of Bitcoin, for example. Many people in the market thought that this would make Bitcoin's price go up, but experts say it could actually go down to levels not seen since February. Bitfinex experts wrote in a September 2nd note, if we had to guess, we would warn that when rates are cut this month, we would expect a 15 to 20% drop with a bottom of $40.50 for BTC. Bitcoin has always been risky in December, and the expected Fed rate cut only makes things more complicated, which could make the market even more volatile. If things change in the economy as a whole, this line of thinking could be easily shown to be wrong. This is a risky time for buyers. The note said. Federal Reserve Chair Jerome Powell said in August that the time has come for the Fed to lower interest rates, which made the market more hopeful that rates would be lowered. The decision is set for September 18th. When interest rates go down, standard assets like bonds and term deposits become less profitable, which makes investors want to buy assets that are seen as riskier, like Bitcoin. Its last sale was on February 8th, when it was worth $46,000, which is 20% less than what it is now. Marcus Thielen, head of research at Tench Research, said that's also the level Bitcoin needs to hit before a bull run starts. Telen said at the beginning of August that we want Bitcoin prices to drop into the low 40s so that the next bull market can start at the best time. In a post on September 3rd, third-party expert Joachim Sort said that $60,000 is no longer a blow-off top level that speculators control. It's a consolidation zone where mature long-term traders gather and hold on to their positions hodl. A crypto trader named On Crypto Trades said that Bitcoin is still battling around its bull market support band. They also said that doesn't seem to want to move to either side of it at this point. Yeah, I think there are some things we can look at about BlackRock that might give us a hint about what they might be up to. The thing that worries me the most about that is that Larry Fink has said on the record that markets don't like republics because they're messy markets like totalitarian governments instead. Larry Fink, on the other hand, is crazy about risk management. He has worked for a long time and thinks that free governments and to some extent, a free market create more risk than he would like to handle. You can control the amount of danger when you can sort of centralize and control both markets and governments. That might be good for asset managers who are crazy about this, like Larry Fink, that kind of thing. But for regular people, it limits our freedom in the long run. I kind of see Larry Fink as someone who wants to concentrate power and wealth in a few hands. People who aren't part of the oligarch class or the top 1% would gain from those kinds of policies. So it's clear that this has big effects on average Americans, which has made the Bitcoin market weak overall. But in the coming months, things might get better. It's not good news that Ethereum's value against Bitcoin is at its lowest point in 1000 days right now. That's a huge blow to everyone who has invested in Ethereum, especially since it has been upgraded many times in the last few years. Ethereum ETFs have also been released, but they haven't really picked up speed. The good news is that Ethereum ETF is still a strong rival. There's a chance that the market's weakness is just timing, which will soon work in bulls' favor. All coin markets have gone up and down over the years with the seasons. Chainlink, Blanket is a great example. Its worth usually goes up against Bitcoin in the second half of the year and down in the first half. It dropped over 60% of its value in the first half of 2022, 2023, and 2024, and grew by more than 120% in the second half of 2022 and 2023. Altcoins are in the middle of a beautiful retest against old price levels, which shows that there is nothing wrong with the market's present thesis. Still, it's a lot like any of these stages that the markets have seen in past cycles. It would be the same if the markets were brought back to the end of 2020. Altcoins would be strongly correcting downwards while Bitcoin would stay the same, or keeps going in the upward direction. In this way, the altcoin market's market capitalization is still 50% less than it was at its peak in 2021. There is still a lot of energy left, and if you look at how the altcoin market as a whole has been moving compared to Bitcoin, you could say that altcoins are about to make a big breakout. They have a huge positive divergence and a strong support level on a higher time frame that their whole market capitalization rests on. At this point in the market, it makes sense for people to want to buy in those altcoins because they can help them make more Bitcoin.